Hey everyone, Jeremy Goodrich from Shine Insurance Agency with the Business Insurance Made Simple video. This video is very quickly going to go over the highest level of business insurance for you. Whether you're trying to learn how to share business insurance with other people or you own a business and you want to know what kind of coverage you need for your business, this video is very quickly going to dig right into exactly what you need and give you a high level overview. So what will we cover? Well, we're going to start with 4 important terms that you have to understand to be able to get anything else, and 2 types of insurance. So this will be kind of a quick overview of the different types of insurance, and as you watch, you can think about which should apply to your business and which may not. So what are those 4 important terms? Well, the first is coverage, the second, exclusions, the third, limits, and the fourth, deductible. There, we've got it, right? No, I'm kidding. I'm going to talk about each of them separately. So let's talk about coverages. So this is specific bad things that trigger the insurance policy to respond. This word is really what we think of when we think about insurance, right? If my building burns down or someone sues me for something bad that happened to them because of my business, I expect that there is coverage from my insurance policy for that thing. So coverage is the first term. The second thing is the opposite, and that is exclusions. There are specific bad things that would not trigger the insurance policy to respond. For example, if you have a flood in your building and you do not specifically have a flood insurance policy, most of the time your property policy does not cover that bad thing. It is excluded from your standard property policy. So that would be an example. Limits are an incredibly important thing to understand. This is the highest amount of money the insurance company would pay out in a claim. So let's say you have a building and a tornado hits that building and your building has to be completely rebuilt. It is going to cost $1.5 million to rebuild that building. Well, if you have at least a $1.5 million limit on your insurance policy or more, then you would have enough coverage on your policy to be able to cover the cost of replacing that building. If your limit was $800,000, but it was going to cost $1.5 million to rebuild it, well, unfortunately, the insurance company is only going to pay that $800,000, not the $1.5 million, because at $800,000, it reached the limit of coverage on your policy. Finally, the fourth one is deductibles. This is the amount of money you agree to pay out of pocket before the insurance company even gets involved. So common deductibles on a homeowner's insurance policy are like $1,000 or $2,000. Sometimes deductibles are that low on business insurance property policies. Oftentimes, though, they're significantly higher. I have clients with $5,000, $10,000, $25,000. I have a client with $1 million deductible on their insurance policy because that's the amount of risk that they're capable of taking on before the insurance company gets involved. Obviously, the higher your deductible, the lower the cost of the insurance policy. So making the deductibles higher is a way to limit the cost of the insurance policy. At the same time, if you don't have $50,000 to be able to pay out before the insurance company gets involved, then it doesn't make sense for you to have a $50,000 deductible, and that's extremely high for most business owners. Most people keep a deductible somewhere between $2,500 and $10,000, unless you're a much larger investor or a much larger business. So those were the 4 different things, language pieces, right? Terms that we need to know to be able to move on to this section. So let's talk about types of insurance. And again, this is not a comprehensive list, but it's the most common types of coverage. So let's dig into it. The first one is property. The second one, liability. The third one, workers' compensation. The fourth, commercial auto, umbrella. And then finally, kind of a catch-all of a bunch of add-ons that I'll go over really quickly. So let's dig into it. Property coverage is coverage for physical belongings. This could be your building. It's your stuff, right? This is your stuff, your building. Tenants' improvements inside a building. Most people don't know this, but if you are a tenant inside someone else's building, then the improvements that you build in are called tenants improvements, right? And then the third one is business personal property. Now, how do you know the difference between these 3 things? Well, it's really simple. Let's imagine that you have a building and you pick that building up and turn it upside down and shake it. Well, the building itself is the building. That's self-explanatory, right? I didn't need to explain that to you, that's the building coverage would apply to the building itself. All the stuff that fell out when you shook it is called business personal property. This would be the tables and chairs and computers, and any of the property inside of that building would be considered business personal property. Finally, stuff that didn't fall out because it was attached, but is owned by the tenant, not the building owner, like I said earlier in the video, is called tenant's improvements. So these are the three different common types of property that we need to consider having coverage for when we put property coverage in place. Loss of income, really simple. If a building burns down or isn't usable anymore, you aren't going to be able to take income from that. It might take a year to rebuild that building, right? And so during that time, you've lost all the income that you should have got from the building. If it's a covered loss and you have loss of income coverage, that should replace the lost income for the period of time it took to bring your building back to be able to run the business out of. So that is the bottom line for loss of income coverage. Liability coverage, there's lots of different types of liability coverage, but the basic explanation of liability coverage is coverage for bad things that happen to other people because of your business. There's lots of types, like I said. The most common is called general liability coverage. This is coverage for physical bad things that happen to other people because of your business. They slip and fall in front of your business. They slip and fall in an aisle of your grocery store. They were standing somewhere and something collapsed and they were injured because of a part of that. Someone on your team was a contractor running some kind of lift and hurt someone in some way. Now, if a person's an employee, it's different. I'll get into that in a second. But if it is someone who is a customer or client, or even just a bystander who's walking by, that coverage is called general liability coverage. But there's other types of liability coverage too. What happens if you give someone bad advice? They go out and implement that advice, and it turns out to be really bad for them, and they end up suing you over that. That's called professional liability or errors and omissions coverage, right? What happens if you create a product and that product injures someone? Maybe you create a child's toy and that child's toy had a defect of some kind, injured someone or worse. That's called products and completed operations liability coverage. So there's lots of different types of liability coverage, but at the bottom line, it's coverage for bad things that happen to other people because of your business. Workers' compensation coverage, really simple, coverage for injuries to your employees while on the job. In almost every state, it is legally required to carry work comp coverage. That's something that's really important. If you have any employees, even if they're part-time employees, oftentimes, even if they're independent contractors, a work comp policy is important, and you want to talk with your insurance advisor about that. Commercial auto seems really straightforward, right? It's coverage for automobile accidents associated with cars connected to your business. Notice I didn't just say cars owned by your business, right? So cars owned by your business is the most common type of commercial auto coverage, right? Maybe you have a fleet of vehicles. Maybe you just have a couple of delivery cars or whatever. If you own cars in the business name, those cars need a commercial auto policy. But there's more than just that. Imagine if you have employees who are driving their own personal car, maybe going to the post office to pick something up or drop something off. They're in an accident during that time, and at the scene of the accident, they say, well, I was working for so-and-so business while I was driving. There's a possibility that your business becomes implicated in that auto situation, even though the car was not owned by you. That's hired and non-owned auto coverage, specifically non-owned auto coverage in that example. So there's a lot of different types of auto coverage that should be considered as you're considering your insurance needs. A commercial umbrella is the additional and expanded liability coverage above the limits of your general liability coverage. So usually the general liability limit on a business insurance policy is about $1 million, is about $1 million. Solid foundational amount of coverage. But certainly a business, especially a business with a lot of assets, could have a liability situation that breaches the limit of $1 million, right? And so that's where an umbrella would come in. We can add additional liability coverage above and beyond the primary liability coverage and have more on top. That's called a commercial umbrella. Let's talk about some miscellaneous coverages really quickly, just other coverage options that don't fit into those main categories. You may have tools and equipment. This is called inland marine coverage, stuff that moves from place to place. It's not business personal property because it doesn't stay in your business, right? It's traveling in your vehicles or in other ways. That is a coverage that you want to make sure you have if you have any of those types of things. Ordinance and law coverage. So your building burns down. It was built in 1960. It's being rebuilt. And during that process, the contractors go to the city and they get all sorts of permits. And the city says, well, you can't replace that one thing the way it was built in 1960 because now it has to fit the ordinance of the town or the law of the town. It's going to cost an extra $20,000, an extra $50,000, an extra $100,000 to bring it up to code. Well, that isn't covered under your primary policy because your primary policy is set up to get you back to where you were before. That building was built in the 1960s and didn't have those upgrades. If you don't have ordinance and law coverage, you may be out of luck on coverage for that specific type of thing. Terrorism coverage. If there was a terrorist attack or something like that, this coverage was implemented by the government after 9/11 and is still something that isn't always required, but is always available to business owners as a part of coverage on their policy. Flood insurance, I talked about that earlier. Earthquake insurance, oftentimes not included under a standard policy. You need to add it separately. Mine subsidence. What happens if your building is built on top of an abandoned mine that then collapses and changes the structure of your building? Well, a standard policy doesn't really give you coverage for that, but mine subsidence coverage absolutely will. Water backup coverage, backup of drains or water sources. Equipment breakdown coverage. If you have a 4-story office building and that has an elevator, that elevator breaks down and people can't get to their work, do the things that they need, or you have a restaurant and suddenly the HVAC system goes out. Equipment breakdown coverage can help with those losses. Cyber liability and data breach coverage. Look, if you handle data in any way, and most of us do, you should have cyber liability and data breach coverage if something bad happens to you in a cyber way. I guess that's the best way to say that, is the type of coverage that's there. What about directors and officers coverage? If you have a board of directors, they're making decisions. Maybe a board makes a decision, that decision turns out bad, someone sues the board over the decision that they made. Well, if you don't have directors and officers coverage, those directors and officers could be personally liable for that decision that they made. In fact, I never join a board unless they clearly have directors and officers coverage. If you have a board in your business, it's important to consider that. What about key person life? Someone passes away who's a key member of your business team. You've got to replace that person. There's a lot that goes with that. You've got to replace that knowledge. It would be nice to have $1 million, $2 million, whatever that life insurance policy is, to help you navigate that tough time in your business. That's a key person life policy. And then newly acquired properties. A lot of times we can have coverage on our policy. So if we pick up a property and forget to tell our insurance advisor or something like that, then we have coverage for a limited period of time for that. All right, that's it. So what did we cover? Well, 4 important terms. We talked about coverage, exclusions, limits, and deductibles, for the foundational terms in the insurance world. And then we really quickly went over types of insurance. I hope that was really helpful, and I hope if you own a business now, you have a better sense of what some of the coverages you need are. If you want to talk with us about getting those coverages, obviously we can help you out. Check us out at shineinsurance.com and just go through the process there. But whoever you work with on your insurance, make sure they are explaining things clearly, going over what you have, what you don't have, and what you might want to consider. The risk management strategy of your business is one of the core things that are just going to help you to succeed in your business. I know you can do it. I know you can move forward in your business. Having a clear risk management strategy is a big part of that, and insurance is a major tool in that process. All right, it's been wonderful sharing with you. If you want more in-depth information about any of the topics I talked about here, check out our playlist at shineinsurance.com. That is Business Insurance Made Simple. We go deep into many of the concepts that I hit here. All right, until the next time, have a wonderful day.